back to another episode of Today in Real Estate with myself and my mentor, Dave Littleton. Today we are on episode 7 and we are going to take a deeper dive into lending and mortgage financing. Dave, why don't you kick us off?
Yeah, we'll start off with a California Association of Realtors survey they did recently. They found that millennials and first-time buyers are going to be probably the most eager to make a purchase during this COVID environment. And there's two motivating factors. One is very low interest rates, which we've talked about. And the other is the fact that this group is not spending a lot of money right now. So they're building funds for that down payment. So things are lining up for the first-time buyers and millennials. So we've got with us James Loud, the Vice President of Lending for Guaranteed Rate Affinity. So James, what should these first-time buyers and millennials, what should they be doing to prepare for a mortgage?
Well, Dave, so, it's really important that anybody that's looking to buy or purchase a home, especially for the first time, that they have a good awareness of their credit. They want to make sure that they know where their credit score is. They don't have to know exactly what it is, but they have to have a good idea, is it in the 700s, is it in the mid 600s? And also have a good idea of what's on your credit report. I mean, you can go to, I think, freecreditreport.com offers the ability for you to pull your credit from all three of the bureaus, TransUnion, Equifax, and Experian. I think you can do it once for free per year. So just as a consumer, as a first-time home buyer, a real positive, responsible thing to do is really to have a good grasp on your credit. You want to make sure you understand what's on there, make sure it's accurate, and make sure that your FICO scores are at least in the range that you think they need to be, so that you can get the best product or the best loan product for your purchase.
So James, when it comes to those first-time buyers, when they're in that process of getting pre-approved and pre-qualified, should they limit their spending and avoid any large purchases, or does that not really have an impact?
Well, it has a huge impact. In fact, you definitely want to limit your spending substantially. I would not make any large purchases whatsoever during the process, whether that be cash or on credit. And the reason being is if you use a large sum of cash to purchase something, like a car or something big, while you're in escrow, that cash could have been used as reserves as far as the lender is concerned, or it could have been part of your down payment, which would be drastic. So absolutely stay away from large purchases. And as far as credit, if you're going to put that on a credit card, that could increase your minimum monthly payments on that credit card, which could affect your debt to income ratio. So either way you go, a large purchase during any large purchase during being in escrow on the purchase of a home is a no good situation. Definitely steer clear of that.
So James, say a potential buyer has organized their tax returns, bank statements, pay stubs. How long does the pre-approval process take?
Well, there's two different levels of pre-approvals, right? There's a pre-qual and then there's a pre-approval. A pre-qual would be filling out an application online at our website, which takes about 5 minutes. And then running your credit, which would take another 20 minutes or so, 10 minutes or so. And then running your information through what we call DU and LP, which is Fannie Mae and Freddie Mac's automated system. And that'll give us a preliminary approval or not, right? It'll let us know kind of where we stand with regard to lending. Now that would be a pre-qual, right? That would let you know that you're pre-qualified. A pre-approval is when we collect your income and your asset documentation, and we submit that to an underwriter and have your file underwritten as a to be determined property, and then we get an underwriter approval, which is a full-on pre-approval. So basically, all you have to do at that point is find the property, insert the property, get the appraisal, and you're done. So time frame wise, the pre-approval is going to take a few days. I would say maybe even 5 days or so. But a pre-qual would take 1 day, maybe 24 hours.
So if there's a case where the buyer needs to make some improvements in their credit score or pay off some debt, you have the mechanisms to kind of coach them through that process.
We do, yeah. We have a couple different contacts and we have people that we work with that can help with building up credit, or at least giving some advice on what would help. It's normally pretty self-explanatory, though. I mean, if you see something that needs to be paid off or whatnot, or paid down, it's not too complicated. But we do have the resources and tools to help with those things. Absolutely.
Yeah, so as you guys can see, mortgage lending and financing, it's a massive part of this industry, and it's definitely, it takes a little bit of learning, especially for those first-time buyers. But that's why we have, people like James who will walk you through the process and, coach you step by step. So we hope you learned something today, and we will continue to cover mortgage and financing on the next week's episode.
All right, we'll see you next week. In the meantime, it's not business as usual. It's business as COVID.